Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com. It's Friday, November 7th. Well, I think the most interesting thing that happened today, or the most revealing incident that happened today, besides the market having a pretty good rally, was the story that came out of Washington with our president-elect, Mr. Obama. He'll always have this statistic associated to him, and that statistic is immediately after he was elected, the market dropped almost 10% in 2 days. It's the largest drop ever after any presidential election. So he's going to have that statistic associated with him for the rest of his life. Okay. So on the third day, he calls a press conference, and all of Wall Street is eager to hear what he's going to say, to see maybe if he can correct some of the misunderstandings, maybe, or some of the damage that was done. So everyone tuned in. It's unusual to have a press conference on a Friday afternoon at 2 o'clock. That's market insensitive to begin with. But nevertheless, we were all eager to hear what he had to say, and he informed us that the biggest decision so far that he has to make is what kind of puppy dog he's going to buy for his children. You've got to be kidding me. This is what he said. So unfortunately, this is the first thing that he has done that I can gauge him by, and I got to give him a 0, or maybe even a -2. Unbelievable. This man is either inept of the market or he is so insensitive to the market. I'm not sure, but either is not good. I'm afraid we're going to have 4 years of this insensitivity towards the market. Like I said, he's either inept or he's insensitive. My advice to him is to keep Mr. Paulson around, because Mr. Paulson is the only friend that the market has within both parties. He's the only one there that understands what makes this market move. Maybe we should get Mr. Obama to watch my website every day, and he might get enlightened a little bit. Anyway, the market, in spite of Mr. Obama, the market closed quite strong, right on the high. I thought it was a pretty good comeback. So I was pleased with today. But you know what? Even if they pulled back another 100 points, it still would not have upset my theory about the reverse head and shoulders. But of course, I'm happy to see the rally, and I believe it might be the first step to being back on track again. And we'll look at all of that in the final segment. We won't spend a lot of time on the indexes because we know what we're looking for to develop, and that's the right shoulder of this reverse head and shoulders pattern. But I do have a new idea tomorrow. It's SFI. It's a call on the long side. So without further ado, I'll show you the chart, and I'll show you how we're going to take this idea and turn it into some money. We're looking at a daily bar chart of SFI, iStar Financial. Stock traded 3,600,000, so it's pretty liquid stock, and it's a very cheap stock. So it's something that you can buy, a few shares of if you see fit. Of course, none of these calls in the future will be for if you want to be on the crybaby indicator. Then I would probably not, buy this idea. Yeah. Anyway, this is a call on the long side, and we were looking to buy it on Monday at $1.35, and the target is $5.25 right up here. Now there's a sub target, which I'll point out, and I'll leave it up to you whether or not you think that's resistance. I think it will have enough power to get up to this resistance, which is 525. But in either case, it's got quite a ways to go from where it is. All right, I'm going to zoom in now to give you some more of the specs. Okay, like I said, we'll be looking to buy it right around $1.35. That's right where it closed. Give or take a nickel. Sell stop would be a close below 97 cents. That would be a close below that. Alright, what else do I see? Okay, I see a ascending triangle. Which, as we know, is a bullish formation. And it's my favorite formations. Ascending and descending triangles. They seem to be the most reliable pattern that I have ever found in all the years I've been trading. Do they all work out? Not all of them, but I'm going to guess 80 or 90% of them work out. At least to some degree. Some bigger than others, obviously. That's the part that's the unknown. We don't know exactly how much we're going to get out of this. We can take a good guess at it, but we never really know for sure. Okay, so that's our ascending triangle. This would be our breakout price right here. That's what we're looking for. Once it gets through that, we think we're in pretty good shape for it to continue on up. Not only that pattern, but we also have this look, which I find interesting, and it's this look of a bowl, you know. Let me get one of my new little tools here. Okay, you see this bowl here? That's also a pretty bullish look. So we've got that ascending triangle, and it's also got a V bottom, sort of. It's not as defined as the bowl, but it's a good looking start. So let's recap that. That's SFI. It's a call on the long side, and when it's all said and done, if we get real lucky, we can make ourselves close to $4 on this. All right, let's move on to the averages. I won't spend a lot of time on them, but we just want to see how that right shoulder is developing. Okay, we're looking at a daily bar chart of the Dow. Now, I've used some of my helpful tools that come with this program, and I think it'll be helpful to see what I'm looking to happen. Now, this obviously will be the left shoulder. That's totally complete. This action down here is the head, and what's going on over here is the right shoulder. So as long as it stays within the confines of this box and doesn't violate the downside, and we can go back and forth for a few more days. I mean, look how much action it took on this side. I always like them to match pretty much, but they don't have to match perfectly. You know, this is still developing, and it's going to take a few days. And then after it's developed, if we turn out to be right, we're going to get a breakout on the upside, and that would be a pretty bullish formation. So let's go look at the rest of the indexes. Okay, we're looking at the daily transports, and I'm going to use the same props or visual aids, we'll call them. But this is what we're looking to form. We've got our left shoulder, we've got our head, and we're waiting for this right shoulder to form. Now you can see there could be a lot more work that goes on in here before we actually get our breakout to the upside. So as long as this stays pretty much within the confines of this box and doesn't really come down and violate the bottom of the head, we'll be in good shape. All right, next we're going to look at the Russell 2000. Okay, here's the Russell 2000, and you know it has the same look. All these indexes have the same look. That's why I feel that they're all saying the same thing. They're just not quite complete with the right shoulder yet. So that's what we're waiting on. Next, we'll take a look at the SPYs. Okay, this is the SPY. You know, if I didn't tell you what index we were looking at, you wouldn't be able to tell one from the other. That's why I said they're all saying the same exact thing. So still here, we're waiting for the right shoulder to be complete, and then after that, the next thing that should happen from this pattern is a breakout to the upside. Okay, here we have the QQQQs, which is probably the most symmetrical of all the reverse head and shoulders patterns, but they're all saying the same story. So we'll see how it develops. That's what we're waiting for. And if it's a true reverse head and shoulders, which it's starting to look more and more like every day, the next thing should be our breakout to the upside. So here I go betting again, but my guess is that we get a breakout up here before we get a breakdown below that. In other words, I'm saying that the pattern will play out to the upside before it breaks down and gets aborted. Okay, that's my idea. And it's my view of the market. And until Monday, this is TK signing off.